cautiously optimistic.
Okay.
That being said, I have scenarios where it could be pretty bad. I believe if we could unlock all this private capital, we're going to have enormous growth. At the same time, some of this is going to create new inflationary pressures.
Right.
And I do believe that's probably the risk that is not factored into the markets. I think the bond market is going to tell us where we're going. And I've been saying now for some time, I may have said it last week, there's a probability we could see the 10-year over 5%, maybe even 5.5%. That would shock the equity market. That would not be a good scenario. I actually would start a conversation that we need in our country, and that is, how are we going to bring down our deficits? The positive side of what the Trump administration is doing, they are trying to find growth from the private sector.
Right.
So depending on how that all plays out and how quickly the private sector can effectively put capital in the ground and start building, that's one side. At the other side of it, there are some very large inflationary pressures that we all have to be aware of. And depending on how this plays out, there is a scenario where we're going to have much more elevated interest rates because of inflation. And that's going to have a very negative impact on the equity market. It's going to change, it's going to force a revaluation, but it will probably create a real conversation. What are we going to do about the deficits?